Okay, hello everyone. This time we're going to work on problem 24-4A dealing with flexible budgeting. We are looking at the Quickies company and we have quite a bit of data about their standard cost for one of their units. We have some information about their overhead budget. They're operating at 75% of capacity. Their factory capacity is 20,000 units, so that means what we're looking at in this section here is a budget for 75% of that, which is $15,000. Now let me slide a little bit so we can read the requirements. In requirement 1, we'll examine the monthly overhead budget. We're going to determine the cost per unit of each variable overhead item and its total per unit cost, and then identify the total fixed cost per month. And in the second area, we'll prepare a flexible overhead budget for October showing the amount for each variable and fixed cost at 65, 75, and 85% of capacity levels. Okay, let's shoot back to the top. Let's first tackle this problem on another page where we've got some room to put it together, and let's first determine the variable cost. Okay, there's indirect materials, indirect labor, power, repairs, and maintenance. That's all given right in here. So let's drop in those numbers. 22.5, 90, 22.5, and 45. Okay, now in the problem it says right in here, it's based on an expected volume, this is the predetermined overhead rate, of 75% of the factory's capacity of 20,000 units per month. Okay, so 20,000 times 75%. I know you can do this in your head to come up with 15,000 units, but it comes up with 15,000 units, right? So if we were going to determine this on a per unit basis, here's our 15,000 units. Well, we could then put in here equal D3 divided by that, right? And come up with $1.50 per unit. Now, we can use that same formula to come up with that. Have we accounted for our total variable cost per unit? We just sum there and we come up with $12 per unit. Okay, so if I put a dollar sign around this, let's give ourselves a little bit of room there. That's our variable cost per unit. Let's tackle the fixed cost. Now I'm going to, rather than go down, let's see if we can go across and see if we can manage to see it. I'll slide this over a little bit. Will that work? Yeah, I think you can see that just fine. Now we'll look at our fixed costs per month. Now with fixed cost, we're much more interested in the total cost than the per unit. So let's take a look at what the fixed costs are. Depreciation, building, machinery, insurance, supervision, 24, 72, 18, and 66. Okay, so let's drop in those numbers. And they were for, first two were depreciation. One was on building, one was on machinery. Then we had taxes and insurance, and the last one I think was supervision. Okay, so change that word now to fixed cost. Sum that. I'm just going to use the same sum, but of course now it won't fit because it's looking for decimal places, so I'll reformat that. And we've got 180,000. So that's our total fixed cost, and that's our total variable cost on a per unit basis. With that, we can start part 2, which would be determine the flexible overhead budgets for the month ending October 31st. Okay, so let's grab those variable overhead costs and put this down here. We should probably give this a nice title. insert another row here, and we'll call this our flexible overhead budgets. This would be for the month ended October 31st, and I don't even know if we know the year. Let me look over here. Yeah, they don't even give the year, so we could either leave it blank or you could use this type of technique. Okay. I should capitalize the budgets, just a little bit of formatting. If I center this over the columns I think I'm going to use, we could be in pretty good shape. And I'll put an underline over that just for formatting. Okay, so now we've got to worry about our variable overhead costs. And we're going to need a couple different type columns, so let's leave some room here. Let's put together our flexible budget. Let's leave this one for our variable amount per unit. And this one is our total fixed cost, right? I'm going to change that amount to a $sign just to be consistent. We'll center that. And in this case, I will center that like that. Put another little line so we can see that. Then over here, we need to work on a flexible budget for, we're going to do, let's just say where sales equal 13,000. Okay, we've got a couple more of these to do, right? We'll drop one here, we'll drop one here. We'll widen these columns just a hair. Alright, if I widen it a little bit too much, you won't be able to see it. So we'll see if we're still in good shape here. Okay. And what I think I'll do is just run this one across for formatting. So we're going to do a flexible budget where sales are equal to 13,000 units. This one where sales are equal to 15,000. Why don't we use the K sign? And this one where sales are equal to 17K. That way we can see it on our columns. Okay, so indirect materials, we know that that is going to be $1.50. Let's format this a little bit here. And I think I can just copy from right above and everything should fall into place just nicely. Yep. We don't need the $sign, obviously, so we'll get rid of that. The total fixed costs, there wouldn't be any, but now at a flexible budget, we can multiply times those various dollar amounts. I'll just put them in here. You know what, since we are going to put it in there, we'll just leave it at that. That's good enough. We're going to take that $1.50, and I'm going to lock in column D times that. I'm going to lock in row 14, and now I should be able to copy all three of these or four of these in one shot, and that should all be the right amounts, right? Multiplies times that. I'll just arbitrarily test a couple. Yep, looks fine. Okay, so there's our total variable costs. Let's now work on our fixed costs. Okay, now fixed overhead costs are made up of these items right here, and those total costs. So let's move that right down here. Alright, now those are all fixed, so we can pull those right from there, and it won't matter. Well, actually, let me drop it right here, since that's where we're supposed to be getting it from. Copy right on down, right? Turn this into $1 with no decimal places. Let's shrink this a little bit. Shrink this one back a little bit. Okay. Now, if that's the case, I will lock in E, column E. I know you can't see what column that is, but all of these should be exactly the same if they're fixed, regardless of the volumes. We're not expecting these costs to change. Okay. That looks right. And we only have one item left to do. Determine our total overhead cost. And here, all we're going to do is add that cell and that cell, right? Now, we could format this. Put that in the middle of the screen so you can see it. We'll just put it into an accounting double underline just so we can have a total there. And we have answered this entire problem. I hope that's been beneficial. Thanks, everyone.